I hear the narrative a lot that Bitcoin isn't the fastest or cheapest to use in the cryptocurrency space. In this video, I'm going to explain exactly why that lends credence to its store of value proposition. Bitcoin has three fundamental aspects that each point towards the intent of it being a store of value. First off, the fact that it's proof of work, meaning you actually have to put energy into the system in order to get the product of a Bitcoin out. And with the overarching idea of anybody putting energy into the system not wanting to take a loss, the initial base cost value of a Bitcoin is the cost of that energy. Now that that digital service or digital network has energy and a cost input, another fundamental idea programmed into the Bitcoin protocol that is crucial to not only have Bitcoin maintain value, but grow in value significantly over time, is the overall limit of 21 million to ever exist. When you have a hard asset or a limited asset, the fiat value that you're valuing in comparison to that asset, when money printer goes burr or what we call quantitative easing happens, the fiat currency that you're using becomes devalued against an asset that it's holding its own because of its hard cap limit. So in some way, the volatility that you're seeing in the Bitcoin price action is actually somewhat a reflection of the volatility of the dying fiat or the US dollar by comparison. Okay, so we have the initial cost input to the system, and we have the hard cap, which should help maintain or drive price upwards. And now let's address the issue at hand, where Bitcoin, might have been the first mover, but it's not exactly the cheapest or even the quickest to use within the crypto market space. By traditional store of value methods, it's definitely the king. If Bitcoin were to change its protocol to become quicker and cheaper to use, it would almost work against its store of value proposition by allowing more people in the market that own Bitcoin to readily use and put that Bitcoin into the market day by day. Because there is a little bit of resistance there, being I don't want to spend that money to use that network, rather than going over to another cryptocurrency project and spending that low fee, that helps limit the amount of Bitcoin available on the market. Once again, lending credence to the idea of it being a store of value. It's meant to help people keep wealth rather than spending it. If you find value in discussions like these, make sure you're hitting that follow button and hitting that like button. Let me know what you think down in the comments below. See you in the next video.